Hey, hey, hey. What's going on, everybody? Good morning. I know this is a stream out of the blue. I couldn't fall asleep, so I was like, you know what? I might as well just stream on YouTube. Then I'm going to do a Zoom with the private channel later anyways. But how's everybody doing this morning? Good morning, good evening, good night, depending where you are in the world. So this is going to be a little bit of a continuation from the market update webinar that was done last night. It was shared on YouTube for free, of course. I don't know if you guys got a chance to watch that, but we've already have some trades that are active, like GBPJPYs that played out very well since the Asian session and London session overnight. And I am going to be looking for some continuation buys after a pullback, but we will be talking about all that stuff over the next couple of hours. We're going to take our time breaking down the technicals, fundamentals, price action, and exactly what I see for some potential trade ideas to execute on across the board. Okay? Okay, sweet. So you guys have the newsroom to the left, a real-time streaming news headlines coming in every single minute. So if anything's important, we'll see that come to the left here. And then right now you should just see an empty gold screen as we're going to be going through some key events very similar to what we were discussing in the market update webinar last night. If you guys didn't watch that, make sure even after the stream you watch that, because a lot of information was shared, a lot of trade ideas, analysis, fundamentals, and technicals were shared across the board, and it's super informative. Okay. So the fundamental points we're focusing on are still relatively the same. We can see now overnight US dollar having a little bit of a pullback from its highs, but the dollar is still very bullish on the higher time frames. We also don't have any new fear, uncertainty, or doubt impacting the markets just yet. So we have to understand that as well. And we're still seeing market optimism holding a little bit more weight. Global inflation is also getting higher and higher. So that is still a risk, which is one of the reasons gold has still been so bullish fundamentally. And in focus this week is, of course, a lot of the CPI and PMI data from various regions, which is more later in the week there, okay? So very similar fundamental points from last night's market update webinar. We didn't have any economic events overnight. We still had some headlines come in. We'll be looking at that in a second to our left, reading some headlines overnight. But we just want to make sure we have a good understanding of what's going on in the real world markets that's going to be impacting these various pairs or trading instruments that we look to scalp or day trade. You know what I mean? Market sentiment wise, of course, like I said, overnight, US dollar is just a little bit softer and weaker there as we're having a pullback from the highs, but we're still bullish on the higher time frames, and we're going to have to watch that pullback accordingly as we analyze that price action and market structure. Japanese yen, though, overall is extremely bearish and has been bearish ever since the Bank of Japan's unlimited bond buying program, which they're still keeping the Japanese money printer going, which is keeping the Japanese yen weaker on a global scale. But as stated by the Bank of Japan, they're willing to let the Japanese yen. Who the fuck's sending me this? They're willing to let me see. Who's sending me a currency strength meter? No, I don't need a fucking. Who uses currency strength meters? Steven. Whoever's Steven in the chat, someone needs to flame this guy. Anyways, what I was talking about is Bank of Japan still allowing the USD JPY price to go to at least 130 before they have any manual intervention. Manual intervention being looking for interest rate hikes, right? So for those of you who don't understand, to a degree, Bank of Japan doesn't mind devaluing the Japanese yen on a global scale, especially against the US dollar, because it promotes their international business activity still, and it's still a net positive for their macroeconomic activity. But this is a very dangerous game to play, and you don't want to have the Japanese yen you don't want to have the Japanese yen too weak or devalued for an extended period of time, right? But what we've been told by the Bank of Japan is they're willing to let USD JPY at least hit like 130 before they even look for any manual intervention. Okay? Now, global stock markets are ranging because we're seeing that central banks are starting to take a bit more action to combat the rising inflation and bringing a bit more of a hawkish tone to the table and starting to look at more interest rate hikes, which we can see from the Federal Reserve, the Bank of Canada, the Bank of England, which are all more on the hawkish side. We have started to see the global equity markets start to consolidate, but they're still bullish on the higher time frames. So we'll be looking at that in a second as well. Now, some key, what? You guys can't hear me? So now some key headlines, very similar from the market update webinar, is we are seeing a potential second wave of the Russia-Ukraine tension starting to heat up. So we haven't had any new fear, uncertainty, or doubt events just yet that's actually impacting the markets, but we are starting to see that bubble up with these headlines you can see on your screen. So the Russian forces have begun the Battle of Donbass. We've also seen that the second phase of the war has started, referring to Russia's new eastern assault. And then you can also see, just from the Feds, a notable headline about how the Feds are looking for a potential 50 basis point rate hike, nothing more than that at a single interest rate meeting, but a potential 50 basis point rate hike for the May interest rate decision from the Feds, which is obviously going to be having an impact on the US equity markets, US dollar, and so forth. More bearish for the US stock markets as you're having interest rates going up, but more bullish for the US dollar individually there. Overnight, we're seeing market volume and volatility pick up. We saw gold do a pullback with the new daily candle to 1972 key level. As per the market update webinar that was shared as well. We're going to be reviewing all that technical and fundamental analysis shortly. And we can see GJ playing out, running almost 200 pips overnight. So volume and volatility is starting to pick up as we're digging deeper into the second quarter, which is always good to see. Now, gold here, you can see we were just shy from the key level, but we had this pullback overnight from the higher highs printed by buyers on the intraday time frame. As we had these buyers print these new intraday highs, we had some short-term profit taking, which created this pullback structure, driving us down so far to 1972 roughly, where from that area we're starting to get some bit more of sellers exhaustion, buyers jumping in, and we had a pretty nice almost range to range bounce here. 1972 where we started to get some exhaustion all the way back up to 81.5 key level. But now what we can see is gold is starting to consolidate. Of course, our bias on gold is still bullish on the higher time frames here for multiple reasons. One, we've had this daily demand zone respected very well. Two, we had buyers peak and retest previous all-time highs at the 2060s, 2075 price point of interest. And even though we had this very large impulsive move, which was induced by the fear, uncertainty, and doubt from Russia and Ukraine tensions when they were first coming to the table, we had this huge impulsive move. Buyers liquidate positions, an equal pullback here, but the pullback still failed to break overall bullish market structure in this very key higher time frame demand zone around the 1880s. From this demand zone, you can see we collected a lot more buy orders and have the potential to start revisiting these high points as we're trending very nice and bullish, with global inflation still being high and potential Russia and Ukraine tensions still coming back to the table. But we understand that the market moves in waves. As you have all these market participants across various time frames, with the market primarily being algorithmic trading and all system-based trading from institutions and funds, you're having transactions enter the market every minute, every millisecond, every hour on the daily periods from a positional period. So that's what creates these market waves. when we have been watching gold a lot more bullish from this demand zone here, as I was talking about in the market update webinar as well, we can see as buyers print these significant intraday higher highs, to a degree, you enter some type of short-term pullback or corrective phase, whether it's extremely short-lived and lasts a day, or whether it lasts a few days here, right? So now what we are seeing, sorry, I just wanted to check these headlines out here for a second, but newsroom is still pretty quiet here, so nothing. We'll go over the news overnight after I go over some of this technical and fundamental analysis. So we got time, you know what I mean? Okay, anyway, so now what we are seeing is, of course, at the start of this new weekly period, right at market open, going into the Asian session Sunday night, we already peaked new intraday highs nearing almost $2,000 an ounce here, right? So now what we can identify is at these new intraday highs peaked by buyers, we're clearly seeing some profit taking by buyers, liquidating of positions, where sellers jump in to provide that exit liquidity to relieve them out of the market, and this is what ends up driving price down, creating a potential pullback phase. So number one, it's very good to understand structure and when you can identify whether you're having impulsive moves with the trend or whether you're in a potential corrective phase. Number two, you want to identify if the corrective phase is either two things, where the corrective phase can either be having, for example, in a bullish market structure and bullish trend, having buyers print new intraday highs, liquidating positions, and having sellers jump in, creating a pullback. A pullback is what I like to classify as a corrective phase as well. Another corrective phase is where we can see a high printed or revisiting a previous high, and then you create a consolidation zone. I personally like to identify this as a consolidation zone, an order block, order collection, and just a short-term corrective phase as we have more volume and orders generated to have us drive up further depending on the trend. This can be applied both on a bullish or bearish trend. The impulsive move, of course, being as you're trending with the trend and potentially having the buyers back into the scene, this being an example of gold in the bullish trend, and the corrective phase either being the short-lived pullback or the consolidation that can occur, right? So you can see that very simply on how gold has been trending. Whether you're zooming in on the 4-hour or whether you're zooming out and looking at how it's been moving here on the daily time frame and the higher time frames, or whether you want to go look at the lower time frames, it's all the same. The lower time frames are just a fractal of the higher time frames. And even when you come here and look at something like GJ and you want to map out some of this structure here, all you're going to see is as GBPJPY price from the start of April has been going up and has almost gone up 700 pips here, all you're going to see is the formations of bullish market structure, impulsive moves versus corrective phases. Right? So what does that mean? That you have impulsive moves with trend, but they're usually followed after some type of corrective phase, whether that corrective phase is a consolidation zone that can last a period of days or weeks. That's just going to be analyzed based on price action, or whether the corrective phase is a short-term pullback phase that drives price down to a more favorable demand zone and demanded price point before continuing higher. Right? So that's what we had happen last night. And just to start off this week, we had these intraday highs printed. Then we started to have this corrective pullback phase as we have buyers take profit, liquidate positions, and also we go to retest previous intraday highs and previous higher time frame highs peak to the left here, a more favorable demanded price point for buy orders to re-enter the market, you can see as we had that pullback, more buy orders enter the market, we've now had the impulsive phase overnight, right? This was the analysis that was given in the market update webinar about 12 hours ago on the Capital Hungry YouTube, where we called the buys above 165.5 unless we got a deeper pullback to 165, which we did not. And you can see a 250 pip run overnight already, right? So now, when we're looking at GJ and we're seeing that it did a 200 pip run overnight, this doesn't mean that we're guaranteed to enter a corrective phase or have a pullback, but it's very normal to get a bit of exhaustion and a potential pullback before we even get some signs of jumping back to the upside. Same thing when we're looking at the way gold is behaving and moving right now. So when we're looking at both gold and GJ, it's very clear to see that buyers are in control. On gold, buyers are in control because you have global inflation still so high, and you do have these lingering geopolitical tensions, as well as a lot of the interest rate decisions by central banks being priced in, right? On GJ, it's extremely bullish because for GBP, you have the Bank of England hawkish with more interest rate hikes, which is a positive for the British pound on a global scale. But the Japanese yen, you have the Bank of Japan more dovish as they're still keeping their money printer going and their unlimited bond buying program. And we can see individually how bearish the Japanese yen truly is, right? For those of you who use currency strength meters from some website, that's a little bit retarded when you can see the individual movement in value of the Japanese yen or of the US dollar by just pulling up the chart. So some of you guys and gals who are using these third-party currency strength meters, like it's a little bit retarded. You know what I mean? If you're using these indicators and shit. Here in Capital Hungry, we just pull up the Japanese yen currency index, and you can see its price action, the market structure. Or on US dollar strength, you can just pull up the dollar index chart. You don't need to use some Chinese currency strength meter. You know what I mean? Right? But anyways, so what we can see is individually, Japanese yen here is still very bearish, right? There's no point fighting this. And of course, your risk currencies against the Japanese yen, we just primarily trade GJ, right? But any of your risk currencies against the Japanese yen is going to be bullish, like Euro JPY, AUD JPY, NZD JPY. It's all going to be the same shit. Generally, it's all going to be the same shit because even CAD JPY, because Bank of Canada, Reserve Bank of Australia, our Reserve Bank of New Zealand, Bank of England, they're all more on the hawkish side, following similar suit to the Fed. It's really only Euro Central Bank, the ECB, and of course Bank of Japan, which are more dovish, and they're already in negative interest rate territory. You know what I mean? So anyways, what I was trying to get at there is that what we're going to be trying to identify on GJ is this just a short-term pullback phase on the lower time frame where we still have this lower time frame structure being respected overnight? Can we just potentially hold 167 or get a deeper pullback to 166.8 and still have enough volume during our North American trading session with buyers in the market to extend back to these high points? Very similar to what we saw happen at London session. At London session here, you can see pre-London hours and into London Open, we had a pretty aggressive pullback phase here that really just went to go generate some more liquidity and buy orders from 166.200 ppl before continuing us to the upside. Now, as we've had Asian session close at 5 a.m. Eastern and we're into pre-New York hours, you can see, again, very similar to the London session, where prior to the London session open and pre-London hours, we had buyers peak some highs in the lower time frame before having this pullback phase, and then just grabbing some more buy orders, going back to the highs and also higher, right? Now at the end of Asian session in pre-New York hours, we're seeing buyers again peak these new higher time frame highs and new intraday highs, having a bit of a short-term pullback phase where I'm going to be looking at 166.8 and 167, still expecting to see buyers in control to at least go back to these highs and potentially target higher time frame key level 167.54, right? And on the lower time frame, I want to show you guys this market structure here on the 1 minute that we like to use for scalping, where we're getting a nice little order block created here at 167 ppl. But this is the structure that's been held overnight from Asian session all the way to London. This was that London liquidity grab, and then we had that continuation to the upside. This is the bit of a liquidity grab now at the end of Asian session into pre-New York hours. So I'm still looking for potential buy scalps from 167. Also looking for the buy scalps from 166.8. So based on price action here, if we hold 167, I'm still looking for potential continuation buys. Buys above 167.2. If we were to break lower here, I wouldn't sell. I would just expect us to revisit that London pullback price and then 166.8 and still continue to the upside. You know what I mean? Does that make sense for everybody on GBPJPY for the scalp trade idea? Remember, during this session, it's going to primarily be like a scalping session, right? So those are the trade ideas we're going to be looking for. Break down gold. Have some patience, hyenas, all right? A lot of you are hyenas. Tongue out, fucking thirsty, not hydrated. Eyes are drooped down and red, staring at the screen, waiting for a trade. Like, just shut the fuck up and relax. You know what I mean? Relax. You're coming to watch a stream to get some knowledge, some information. Calm down. The chart, the markets, they're not going anywhere. All right? You know what I mean? Guys are hyenas. You don't want to be market vultures, just flying around looking for scraps. You don't want to be market hyenas, just fucking trying to scavenge what you can. You want to be market lions. You want to be very tactical with your hunt. You want to focus on the risk management, the probabilities. You know what I mean? Somebody said, why is this stream so boring? I don't know. Maybe because we're talking about financial markets. Like, this isn't, we're not talking about fucking Fortnite here or Call of Duty or some TikTok memes. Oh, to my Muslim brothers, a happy Ramadan. I hope your guys' fast is going well. I know that's a very tense time. Obviously, fasting is good for you too, but you know what I mean? Okay, so let's go look at some trade ideas on gold now, right? Okay, so GJ, yeah, we're just going to be seeing if we get continued moves to the upside here, back to 0.200, or if we get another double bottom bounce here. Yeah, so far we only did analysis on GJ. We're going to look at gold right now, right? So let me quickly check these headlines out up to the left of your screen to see if there's anything important there. I use Epic Pen. This Epic Pen, but you guys can't see it on the screen right here. I like Epic Pen better than the TradingView drawings. You know what I mean? Yeah. It's called Epic Pen. You can just like Google it and download it. Yeah. No problem. Am I in any trades? I'm in the potential GJ scalp here. From the same entry. But I'm more looking for an intraday trade if we have enough volume to go back to the highs, like the analysis I'm telling you guys. Yeah. But I might just close as a scalp if we hit 0.200 for 20 pips. You know what I mean? Just because we're running this session and I want to give you guys a lot of information and value. Now that I know how to trade, I'm worried that the markets will cease to exist soon. No, I don't think the markets are going to cease to exist soon. No, my entry was around 167 here, just on the PPL retest, going for this PPL to PPL range here, about 20 pips. Yeah. But I'm going to close that as a scalp as I'm running this session, and we can always get some more entries into pre-New York hours and New York Open as well, or the breaks above 0.200. Okay, so I've only done GJ analysis. Everybody be patient. We're going to go through the other pairs as well. I was just reading some of these headlines here. I like to learn, you know what I mean? I like to be involved with what's going on in the world, the politics, the economics, how it impacts the market. Like this, you guys see this news to your left? Which way should I point? You guys see the news to your right, left? You guys see that news feed? Right? That news feed is connected to a news terminal here. I'll show you guys, right? Where it's just economic news and data in real time. Not all of it is like relevant, but I personally like reading this and learning something about global economies or political, what's going on in the political, geopolitical space, what's going on in the geopolitical space. I personally rather scroll and read the Capital Hungry newsroom or the Capital Hungry News Twitter than be scrolling like Instagram. You know what I mean? At least like this stuff to a lot of people might be boring, but like that's just because the modern people in society are just addicted to pleasure. They just want to be entertained. They just want to have pleasure. They just want to have their short-term dopamine hit. But me, see this? 120 IQ, big brain in this skull. No, I actually have 120 IQ. It's not a big deal. Some people, like the average IQ is like 90 or something. You know what I mean? I have 120. It's not a big deal. But you know why it's 120 IQ? Because like I fucking read. Yeah, I took an IQ test. Oh shit. Moderna coming back to the scene, everybody. Okay, before we jump in gold analysis, I just want to see what these Moderna headlines are about. I thought this COVID bullshit was done, you know what I mean? Moderna booster kit. So these guys are going to give us more boosters? They need to fuck off now, man. Omicron's gone. Let it go, right? Right, chat? They need to let COVID go. Who agrees? Who in here still wants lockdowns and stuff? Probably nobody, right? They need to let this shit go. The vaccines, the 6 boosters. Alright, anyways, let's jump in gold here. Okay, so gold. I'm going to be looking for gold buys at a 1972 potential double bottom here. If we get a retest. or if we break back above 1981. Yeah. All right, everybody. I've already given a bit of the fundamental and technical analysis on gold, but I forgot to tell you guys the trade ideas. So these are the trade ideas: is 1972 buys, breaks above 1981 buys. If we break below 1972, maybe we can adapt to short-term sells, but I'm personally really just waiting for pullback buys or breakout buys, playing with the higher time frame trend and structure. You know what I mean? Yeah. Make sure you guys all stay hydrated, drink your water. It's for me it's about 7 a.m. Eastern, but I'm in Canada. Where are you guys from around the world? Chat, let me know where you're from around the world. Yeah, I'd also be looking for new hour. If this hourly candle on GJ also closes above 167.2, I'd be looking for new hourly candle retests and continued buys to revisit these highs. We had a nice buy bounce from 167. I'm still in that trade here with a 10 lot, up about 20 pips. So $2,000 here. But I'm probably going to close at this hourly candle and the new one depending on the price action and momentum here, just because I'm running the session. Holy, chat went crazy. Wow, people all around the world. Let me read this. Australia, Nigeria, Serbia, Iran, Pakistan, Portugal, Sri Lanka, Lebanon, Uganda. Holy shit. Holland, Philippines, London, UK, Bahamas, Bali, Singapore, Netherlands, Trinidad and Tobago, Arizona, America, Surrey, BC, Germany, Bangladesh, New Zealand, Pluto, Malaysia, Brazil, Cyprus, Jamaica, Somalia, Miami. Wow. Yeah, this is pretty nice. My entry wasn't right at the PPL though. My entry is like about here, around 0.05. But we were talking about those same GJ buys at the start of this stream, you know what I mean? Alright guys, so I went through gold, I went through GJ. I'm going to let you guys pick what pair I do analysis on next for trade ideas. Either GBP USD, Euro USD, USD CAD, or US 30. Which one do you guys want to see next? Looks like Euro USD is getting spammed hard. Well, we're going to go through all of them, so it's not a big deal. Okay, US 30. No, I closed it. You guys can see the profit there for today. Just took that scalp with the stream. I closed it for 20 pips there, $2,000. But don't worry, I'm still going to be running the stream for another hour. So I'm expecting GJ to give us like a little pullback for this new hourly candle and still potentially continue bullish. Especially if we break above the highs like we did at London session here. I'm still expecting GJ to continue bullish. Anybody else catch the GJ buys with me? 10 pips, 15 pips, or 20 pips? I just closed it. Entry was at the start of the stream here. Yeah. Yeah, Raj's broker, Dominion Markets, is great. No, this is the only trade for today here. Just a scalp on GJ. I didn't take it overnight. I was sleeping. And then I woke up early. Yeah, GJ's been running since Asian session, so it's been very nice, you know what I mean? That's not a 2K account. That's just the profit on the trade I took. This account's about 300,000 capital. Yeah, that's just the profit for today on the GJ scalp. Profit. You know what I mean? Yeah. Yeah, who here got a chance to watch the market update webinar I did on YouTube last night? It was 12 hours ago. Anybody here watch the market update I did 20 hours ago? 20 hours ago. Here, did anybody watch this? Here, I'll show you guys where we're doing GJ analysis. This was our GJ analysis here. Just straight buys. 165.5, 165, 165.8. Just look for buys. Pullback buys, continuation buys. I was wearing, oh, I thought I was wearing, this is like some Inception right now. Some capital hungry Inception. Let me pause this, right? So now let's come, look, my exit was great because the new hourly candle pullback now had a great exit there. We called the buys from here. Where was it? Right here? Pew, pew, pew. Capital hungry Inception. You can see me right here. You can also see me right here. No, I'm not on. I don't do any copy trading or signals or anything like that. Maybe in the near future when I have a bit more time, but I've been going through a lot of personal health issues and shit and got diagnosed with an autoimmune disease. It's just based on family genetics. So I've been trying to focus more on that. You know what I mean? Yeah, I got fucked. I got a bad lottery ticket. Yeah. But it is what it is. Shit happens in life. Okay, anyways, everybody, let's zoom out here. Because what we had happen now is we're still having very nice bullish price action. And it's looking very similar to what we had happen at the London session. But I want to see if we can get maybe a double bottom at 167 or come back above 167.2. Huh? Yeah, it's an autoimmune disorder. But it's just from family genetics. It's not deadly. It can turn into cancer and shit down the line, but I feel all right. It more just impacts my digestive system. My immune system attacks my digestive system. You know what I mean? But I'm still like fucking feeling good, strong and shit. You know what I mean? So we'll just take it day by day. Yeah, if I didn't tell you guys, nobody would know. You know what I mean? Right? Like who would know? Who would know? Everybody thinks I'm some freak of nature, high energy guy who's always like trying to work hard, high energy. But like, hey man, I go through my suffering and trials and tribulations as well. That's just a part of life. can't be a bitch. Okay, now, yeah, sometimes it's just genetics. Like sometimes it's just the luck of the draw. Could be anything. I know people, like I know some family members that like were completely clean their whole life, never smoked, never drank, and they end up getting lung cancer. But then I know some people who smoke and drink every single day and they're still like okay, you know what I mean? Okay, if this is just the new hourly candle on GJ creating a lower wick, I'm going to personally look for some buys back above 167.2. If we get the buys above 167.2, we have about 10 pips until we revisit this 1 minute price sensitivity area where we're going to have to look for breaks above there to have validation that there's enough buyer order flow and volume in the market to extend us up higher to revisit the highs peaked from London session and potentially 167.5 key level. Right? Otherwise, if we don't come back above 0.200, I'm going to be looking for like another retest of 167 flat and some continuation buys still. Even if we come to 0.800, I'm still looking for buys. This is just like that first trade we called out here. Okay. Now, I just want to make sure we don't have any crazy shit going on this morning. What's the date today? The 19th? So nothing too crazy here. Not much going on with our New York trading session and in terms of economic events and so forth. Just have the building permits and the housing start. So New York's going to be relatively a bit quiet, in my opinion. But I can still see GJ continuing to the upside after these pullbacks. Now, on our dollar pairs, let's do some analysis on GBP Usd, which I don't know if anybody followed the market update webinar last night, but exact pullback to 1.304 and potential sells back to the downside. Anybody follow the GU market update? Let's go find it. There it is. Inception time again. GU pullback to the key level sells. Potential breaks below 1.30 sells. Potential breaks below 1.2985 sells. So we had the pullback overnight to key level in previous supply price sensitivity area 1.304. Failed to break, and we're getting the sells to the downside, which is already 20 pips in profit here. So we're still trying to play our US dollar strength bias. When you're looking at the US dollar individually here, oh, nice one. You got a perfect sell right there. Good catch, bro. So when we're looking at our US dollar overall here, you can see higher time frames are extremely bullish. Any pullback has been very short-lived, which just has us pull back with sellers in control in the short term, giving that exit liquidity obviously to the buyers to relieve them out of the market, and just extending further to the upside. We've already had on the higher time frame a lot of liquidity and buy orders generated in this area when the dollar was consolidating for that entire month. We also retested that area during the CPI day. with the CPI day, you can see with US inflation that was still high, this led to a short-term bearish move on the dollar, which really just went to retest these previous price sensitivity areas. Then the Fed speakers came into the scene with more hawkish remarks about a 50 basis point rate hike to come during the May interest rate decision. That obviously led to some more dollar bulls coming back into the scene here with some very nice bullish price action. Overnight, we can see we had a short-term pullback with buyers again just printing these highs, failing to break the overall structure, and still continuing to the upside to revisit those highs and potentially higher. So I still want to look for Euro USD sells, GBP USD sells, and USD CAD buys. With GBP USD now, you can see we've already had the sells take place from the retest of 1.304 here. So we're in the middle of the zone where really we would need to break back below these candle body lows here when you're looking at the lower time frame. Which is around 1.305 to take the next sell range down about 15 to 20 pips to 2985. I don't really want to just sell at these 1 minute rejection points right now because the sells from the key level are already active. I'd much rather wait to validate a lot more sellers pressure, get the break and retest below that intraday zone, and have a nice 20 pip range to play. A lot of these trade ideas I'm sharing with you guys, if you guys want to rewatch this webinar as well when it's saved again. A lot of these trade ideas, most likely, they're going to play out through the North American trading session. But I'm only going to be running this stream for about another 40 minutes to an hour because I got to do a Zoom with the private channel after this. Okay? Yeah, so overnight, we've had GU already play out and it's active. What the hell is this? GU playing out and it's active for almost 30 pips. So far through our session here, we took the GJ scalp, but I closed that before the hourly candle closed for 20 pips profit, $2,000. Now we're just seeing pre-New York still grabbing some liquidity and setting up here. Gold had the nice buys with the 1972 retest overnight. Now we're waiting for some continuation buys. And GJ also from the analysis overnight was just running 200 pips from the Asian session. So ran very, very well here. Yeah, so we're going to be watching GJ here. If we fail to break 167 and create a support or double bottom, I'm still going to be looking for some buy scalps to play the range from 167 flat to 167.2. Euro USD, I'm actually going to be looking for sells at the break and retest of this key level here. So breaks below 1.0786. I'm actually going to be looking for sells below here to revisit these 1 minute lows, which is a nice 20 pip range, playing the dollar strength, especially against the weaker euro with a dovish ECB. So when we're looking at pairs like Euro USD or we're looking at pairs like GBP USD, because they're going against the world reserve currency being the US dollar, we can see that we have this much stronger bearish price action and market structure. We're having sellers consistently print these lower lows on the higher time frame with just having some pullback phases and continuations back to the downside. What we can see here is at the end of March, at the start of March here, end of February, start of March, we had sellers print these significant lower lows on the higher time frame. From these lower lows, sellers liquidated positions the same time the dollar started to enter a pullback phase, from its highs. This creates a short-term pullback as you have sellers exiting positions, buyers jumping in hand to give them that exit liquidity, essentially creating a pullback to revisit these previous higher time frame lows to the left, creating a supply zone for more sell orders to enter the market and drive down lower. Now, look at here. When you had this low printed by sellers, you had a pullback phase, price driving down to revisit the lows and also digging lower. When you had these lows printed by sellers, you had a pullback phase, price already revisit these lows. Now it just looks like essentially, even if the price action might be messier, we're just going to be driving down lower, as on the higher time frames, we've already had a lot more sell orders collected from the supply zone and price sensitivity area at 1.115, right? No, interest rate hikes from the Feds are not enough to be just bearish on gold. Remember, obviously Federal Reserve interest rate hikes will have a larger impact on the US dollar and US equities, and of course it does have some impact on gold, but gold is a globally traded, hoarded, mined and produced precious metal and safe haven, right? When we're having global inflation still so high, and we're also having these lingering Russia tensions that can escalate at any moment, with NATO regions also getting involved, gold is still going to be bullish on the higher time frame fundamentally, even with the Federal Reserve rate hikes. In my opinion, the Federal Reserve rate hikes are really just going to cause a short-term pullback on gold, but still keep it relatively bullish. Does that make sense to everybody? You have to remember, a lot of us as manual retail traders, especially if you're lacking the knowledge, you're going to only look at gold from a trading perspective and through your lens. But when you're looking at gold from a realistic and logical view, you have to understand it's a inflation hedge. It's a store of wealth historically for generations. It's hoarded by countries. It's hoarded by governments, right? It's used in industry and electronics. It's used in jewelry. It's actual global supply and demand about how much gold is being mined, how much it's being, any supply constraints or issues with shipping of the gold. All of this impacts gold price. It's not just the lines on a chart, and it's not just what we think of gold from a retail trading perspective, right? Gold is a global economic pillar, something that's been used in economics for generations, hundreds of years, right? And has evolved so in industry, trading, financial markets, jewelry, mining. So many other factors impact gold price, right? So with global inflation still being high, and you still have these lingering geopolitical tensions, interest rate hikes aren't really going to be enough to devalue gold. Also, what's very interesting, and I want to explain to everybody while I'm talking to you here, is as we have interest rates go up, and what you're going to see in those correlated economies is those equities drop as well, right? What I mean by that is, as interest rates go up and go up more aggressively, you're going to see an outflow of liquidity in the US stock market as the Feds continue to raise rates. Or you're going to see an outflow of liquidity in the UK equity markets as the Bank of England continues to raise rates. As you're having this uncertainty and doubt with interest rates going up, what do you think is going to happen? Where do you think that liquidity is going to move to? Right? I was even explaining this in the market update webinar last night. When we had the fear, uncertainty, and doubt tensions with Russia first come to the scene, we saw a huge outflow of liquidity in the equity markets and an inflow into gold. It's not going to be out of the ordinary to see that, as you see an outflow of liquidity in the equity markets with interest rates going up and being at these all-time high price points, and then to hedge and still have an increase in wealth, you're going to see that inflow into the safe havens, into gold. Does that make sense to everybody? Right? But anyways, so I'm still looking for the sells here on Euro USD. I'm going to be looking for even a quick little minor pullback, revisitation of like 9.5 sells, breaks below key level sells, and breaks below the 1 minute low sells. Still playing that dollar strength. GBP USD, same idea, but we've already had the sells play out overnight from 1.304. So I'm looking for the continuations from 3005. Now, USD CAD, we're looking for the buys. Our analysis last night that was shared for free on the YouTube about 12 hours ago was looking for a double bottom, which would just show us more buy orders being collected from this price sensitivity area before continuing to the upside here. We didn't get that deep of a pullback, but if we have especially the 30-minute candle here in the next 10 minutes close bullish above the key level, I'm going to be looking for a retest at 1.26 and some continuation buys to the upside, playing the US dollar strength as the dollar index is still relatively bullish. And when we're talking about Canadian dollar correlation fundamentally, we can see that oil in the short term is having a bit of a pullback from its highs. So that's keeping the Canadian dollar relatively bearish. And against the US dollar, Bank of Canada's rate hikes aren't going to hold as much weight there. Last but not least is US 30. I'm personally not touching US 30 in this disgusting range. With lingering geopolitical tensions, inflation still being high, but the Federal Reserve becoming a lot more hawkish, we have very minimal liquidity in the equity markets. It looks like investors are holding more cash on the side. Smart money's holding more cash on the side. And we're seeing less volume in the equity markets, especially US 30 here, with just some very heavy intraday ranging, and only the algorithms really making a lot of money here, right? As a manual retail trader or day trader, this can become very, very frustrating to trade. So I personally don't see anything too clean on US 30 here. I would look for sells at the range break below if we have continued hawkish comments from the Federal Reserve and breaks below 34,200, and I'd only be buying back above 34.6. Otherwise, this 300-point range here with tons of indecision, this being the 4-hour chart, 1 hour looks even messier. I would not be personally touching this. Okay? Getting some headlines from UK's PM Johnson here, so we want to be a bit cautious about GJ. So GJ, it's potentially reacting to 167, making a bit of an order block for the potential buy bounce, which is still valid. But we're just getting some UK headlines I just want to read through and ensure they're not too negative. You know, Boris Johnson can be a prick sometimes. It would be great if the 30-minute still closes bullish and we get another retest continuation. We were just shy from retesting 167 here. What's this guy talking about? Okay, UK PM Johnson says PM fully respects outcome of police investigation into lockdown breaches. Talking about India security and energy security. Talking about Ukraine here. Okay, UK's Prime Minister Johnson, Bojo the Clown, says national security official told cabinet Russia showed signs of failing to learn lessons of recent weeks in the Ukraine conflict. Not too relevant. UK PM Johnson. I need a quick stretch, man. My back's tight. Oh, whoa. Ugh. Oh, I cracked my neck. So potential more sanctions coming from the UK to Russia. We have to be cautious here on GJ. This can lead to us potentially breaking a bit lower here. So I'm going to wait, and I'm not going to look for any entry yet on GJ. I'm going to wait for how this 30-minute candle closes and how the next one set ups, because we're getting Boris Johnson potentially talking about more support for Ukraine and more sanctions on Russia. I just want to make sure this doesn't bring any new market fear to the scene. Also, everybody note out for Tuesday afternoon, if you're going to be watching headlines and so forth, on Tuesday afternoon. Wait, isn't today Tuesday? Today's Tuesday, yeah. This afternoon. Yeah, today's Tuesday, right? Yeah. What the fuck? Yeah, I had a retard moment right there. I don't know why they said Tuesday afternoon like it's so deep in the future. Should have just said today. So today, there is going to be a meeting between President Biden, Macron, German freaking, what's her name? The bitch chancellor, and then Bojo the Clown, right? We're going to be having a Bojo the Clown Biden meeting, a straight meeting of retards, right? Does anybody from these countries like their president or prime minister? Does anybody from the US like Biden in the chat? Does anybody from the UK like Bojo? Does anybody from France like Macron? Does anybody from Germany like Merkel? Chancellor Merkel. Or she's gone now, right? Biden does legit have dementia. No, I hate Trudeau. I personally hate Trudeau. I don't want to say anything that can get me like the Canada FBI to my door, but yeah, fuck Trudeau, man. No, I'm not a fan of Trudeau. Yeah. I'm in Canada. Yeah, I'm in the GTA. I just determine it by the impact. So this didn't have too much. Like, if this headline was gonna have impact, as soon as this headline came out, we would have saw maybe gold push up with some market fear and GJ drop. Because we didn't see any impact, this shows me a lot of this information's already priced in. You know what I mean? So our GJ bullish bias is still looking good for the next 30-minute period, or going into New York session open is still looking pretty good in my opinion. We still have Japanese yen, very nice and bearish here. No. At the start of this stream, some of us already took this GJ buy here. I personally caught about 20 pips of it. My entry was about 167.05 at the PPL. And then I took profit at around 0.300 before the 7 a.m. Eastern hourly candle opened. I didn't take any other trades yet. I just took that scalp with the live stream at the start of this live stream. We're going to be waiting for the new 30-minute candle for any potential better GJ opportunities here. But keep in mind, we also have New York Open coming up shortly. So be patient. Be patient. Don't rush anything on GJ just yet. Just wait for this, how this 30-minute candle closes. It's looking like we can have deeper pullback plays into New York Open. Like, New York Open can easily come to 166.8, which is a retest of the London price before we had a liquidity grab. Retest that bullish market structure in PPL, collect buy orders from a more favorable demanded price point, and then New York volume through the session bring us back up to these high points. You know what I mean? So that's why I just said, with some of those headlines we're getting, plus the new 30-minute candle, it's best just to wait and see how this 30-minute closes and watch the price action set up into New York Open now for the next trade opportunity. right? Same thing with gold here. Gold is best to wait for New York Open. See if we get the buys from 1972 or break above all this price sensitivity to the left, come back above 1980 and 1981 buys. And our dollar pairs, in my opinion, are going to give some nice sells. I'm expecting GU just to make a quick liquidity grab, price up, and then bing, bang, boom, drop to the downside. Same thing with Euro USD. Minor pullback just for going into New York Open and then drop to the downside. GJ, I personally, as a scalper or day trader, I like to stick to one side bias. So I don't like to jump in buys, then jump in sells, then jump in buys again. This can exert a lot of mental energy. It can really drain you out when you're watching the charts in a live trade, watching and trade managing accordingly. I personally don't like to jump back and forth between bias. I like to stick with my main bias, my main pre-planned trade ideas, and be patient and wait for that. Some people like you, Krishak, I'm not going to be rude. You know what? I am going to be rude. Because you were spamming the chat too. Guys like you are fucking retarded, man. You know what I mean? Guys like you are just hyenas. Like, you're going to jump in a buy, then you're going to jump in a sell, then when New York volume comes in, you're going to be taking another trade. By the end of the session, you take 15 scalps and you're up $1 or you're down $5. Is it really worth it? Is it really worth all the volume you're using, the amount of trades you're taking, having no directional bias, having no actual gain on your account, right? You know, just because you have a feeling and you trade on feeling, you're not gonna have longevity in the markets. But yeah, it does look like GJ can come and give a deeper pullback, but I'm personally just waiting for the one directional bias. All right. Yeah. I use capital hungry concepts, universal market concepts. Okay, now for the next 10 to 15 minutes, everybody, I'm just going to be answering some of your questions before I go, and then I got to go do a Zoom session with the private channel into New York Session Open around 8:15, 8:30. But I want to eat some boiled eggs and oatmeal before that, because I'm going to go to the gym after all of that. Make sure you fat fucks go to the gym. If you're a skinny fuck, if you're sitting there in your Fruit of Loom underwear right now and you're fucking all stained and dirty, or you're sitting there fat as fuck in your chair, make sure after you're done trading, you go to the gym. You go for a jog, you go for a run, you go for a walk. You know what I mean? Don't be a disgusting human. Fuck all this fat acceptance shit. Fuck all this like body positivity shit. Fuck that, man. I want you to be a beast. I want you to be a monster who's in control. I want you to be a confident boss. A monster. A beast. You know what I mean? I want you to be a Super Saiyan, a Saiyan. I don't want you to even be human. I want you to be a part of the Saiyan race, the warrior race. You know what I mean? But anyways, so if you guys have any questions, I'm gonna read the chat right here and answer your questions for the next 10 minutes. But then I'm gonna go make some breakfast before my Zoom session with the private channel. What is the 545 news going to be about? What 545 news are you talking about, my friend? 545 news. 545 news. I don't see any 545 news. Jeev, can you make content and nutrition and fitness? I have one webinar about how to gain muscle and lose fat. That's the only webinar you need. But that's the only webinar you need. Okay, for people asking questions about trading psychology, or general technicals and fundamentals, understand, look at this. Look at all these webinars on the Capital Hungry page. Not even any paid mentor out there has this much content. You know why I can do this much for free and still have the Capital Hungry private service? Because I got that much knowledge about the markets, fundamentals, psychology, technicals. Over the last 4 to 5 years, just been amassing IQ points. Okay? Amassing IQ points. No, I just look at the like profit and pips here. I only took one trade today, the GJ buy scalp with you guys. So the reason why I can share all this information for free, fundamentals, technicals, educational webinars, right? Educational webinars, individual analysis, psychology, motivation, and so forth, is because in the private channel, there's even more information. It's even more in depth. You know what I mean? Somebody told me, be humble, you're probably ugly. I'm not going to be humble. I'll be humble to an extent, but I don't really want to be humble. I'm a fan of your content, but not the way you talk. That's because I'm confident. I got high IQ. I'm smart. I'm jacked. It's the way I feel inside. I don't want to be quiet. I don't want to contain this. I want to let it out. I want to express this power. You know what I mean? If you had courage and power coursing through your veins, you would want to share it with the world. But maybe you don't. Maybe you don't. Oh yeah, also everybody, I know this may seem like a lot of content, a lot of webinars, and it may seem like what's the word? What's the word? It may seem overwhelming, but here, if you guys come here and click playlists, I have some playlists made for you guys. So everything's divided up. All of the 1-minute breakdowns, whether it's news or analysis, just the 60-second videos are in this playlist. All of the psychology webinars, self-development is in this playlist. Educational trading webinars is over here. Live trading streams from London back in the day, New York is over here. Live market update webinars and analysis is over here. Individual market analysis across pairs is over here, right? So if this seems very intimidating, the amount of content, because there's like 200 webinars, then if you want to make it a bit easier, just like go through a playlist at a time, right? But all this, these 200 webinars is all up here. It's all up here. All right. Okay, let me answer some questions before I go, everybody. Make sure you guys check out the Capital Hungry YouTube page, free Telegram analysis channel here. We're at 7,000 plus subscribers. Thank you for all the support. Thank you for all the liking, subscribing, and so forth. Really appreciate that. 7,000 plus subscribers in the Telegram. The Twitter. Where's the Twitter? This is the Capital Hungry Twitter here. News Twitter. There's over 37,000 tweets posted here. Right? This is like Forex Factory. Other news websites are sourcing from here. I would want at least a 1 to 2 minimum on scalps, but would prefer a 1 to 3. But at least a 1 to 2. Okay, I'm going to be answering questions now for 5-minute question period. When will Dominion commissions pay to join your group for a month? Me and Raja didn't set that up yet, but I think Raja wants to set up quick question from me. Should I set up a package with Raja on Dominion markets where you can use your commissions to get like 3 to 6 months in Capital Hungry? It'll be like whatever amount of dollars, you know what I mean? He was telling me to do that, so I'll ask him. All right, what other questions we got here? Risk versus reward ratios, whether it's an intraday trade or scalp, I like to use minimum 1 to 2, but prefer 1 to 3, risk versus reward. The higher, the better, but obviously it depends on market structure, price action, and so forth. Okay? I manage risk on scalps based on 1 minute price action. No, these key levels are based on higher time frame historical price points of interest, based on the yearly time frame, quarterly time frame, monthly time frame. I personally see the crypto markets having a very large correction, especially with interest rates rising, the whales exiting liquidity out, and having some deeper and having much more aggressive corrections on the crypto markets. I can see Bitcoin coming down to like 15, 20K, and then I'd probably jump back in there. Ripple maybe going to 0.3, Ethereum maybe going back down to like $500, $1,000. What do I think about the carnivore diet? Is that just eating meat only? That's probably good. It's probably nice. Hope you enjoy that. You guys are a great audience. Thank you for your support. If you guys don't mind, send a like on the stream. If you guys want me to do this more often with the face cam during the week, make sure you send a like, turn post notifications on, share it around with your friends. I shared a bunch of fundamental and technical information as well as trade ideas. I know I don't use the show pips indicator. I just can count pips in my head. So I just count the pips in my head just by looking at the price change and like, oh, GJ went from 0.2 to 0.3. That's 10 pips. You know what I mean? What crypto am I invested in? I'm more invested in XRP and Ripple. But I am looking to reinvest in Bitcoin and Ethereum after it has a heavy correction and all of the mainstream media and masses get shaken out of the market by the whales. Right now, in the crypto market, with NFTs, all of the pump and dumps and shit coins, all of the mainstream media attention, what you're having is the exit liquidity being generated for the whales. You're having all these retailers enter the market, people who don't even know shit about investing, everybody's mom, dad, grandma entering the crypto markets, people trying to do NFTs, metaverse shit, all this shit, but they have no clue about investing or value. All that's going to be is exit liquidity for the whales. You know what I mean? Once we see the whales cash out and take and sweep that liquidity out of the market and have a heavy correction on the crypto market, then I'm gonna jump back in. I'm not anti-crypto, and I'm really faithful in the technology for sure, and especially as it's innovating the internet, and it's going to be innovating in the future as well. But I do see right now as just a lot of exit liquidity being generated for the whales. Too much mainstream media attention, too many pump and dumps and schemes with NFTs, too much pump and dumps with shit coins, not enough regulation and shit, and all of that is going to come and it's going to hit people like a brick wall. But I'm not going to be jumping in anytime soon. Once that correction takes place, I'm going to be patient. I'll jump back into Bitcoin at fire sale prices. I'll jump back into Ethereum at the lows, and I'll buy some more Ripple. And I'm not day trading these. These are going to be something I'll be holding potentially long term for years after that. You know what I mean? What is more important for the equities market impact? The yield rates or their rate of change? Both. Interest rate of change and how aggressive they are is very important. But what's important is how the smart money investors, the market makers, digest those interest rates. My FX rock bottom was when I first started in, what was it, like 2017 now I probably started, almost 5 years ago. My first 2 years of trading, I was a full retard, a market hyena, a market vulture, only focused on the money, wasn't trying to learn anything, jumping from strategy to strategy, jumping from signals to all this other nonsense and trying to find shortcuts. And my first 2 years, I probably lost $50,000 total over 2 years, like depositing $1,000, crashing it, depositing $1,000, taking it up to 5K, crashing it. After all of that trial and error, when I finally started putting effort into learning about the markets, learning about investing concepts, technical analysis with naked charts, understanding supply and demand, understanding fundamentals and economics, diving deeper into psychology and my personal self-development, focusing on the game of probabilities and risk management, then my trading fully turned around and I've been consistent and profitable ever since 2019, right? But my first 2 years, 2017 to 2019, was just full retard mode, which I think everybody goes through to some degree. For some people it's months, for some people it's 5 years. For me it's about 2 years of retard shit. 2 years of being like a gambler, an impulsive trader, emotional trader, and retard, right? After that, I was like, okay, I'm either going to quit this game and never come back, or I'm going to put 100% effort into it. And you can see that in this free analysis channel here. If you come here and go to first post, right, I'll just quote it for you guys as well here. Here, 2019, when this channel was created, the free Telegram analysis channel, right? This is when I started to get consistent and started to show growth. Penny lots with actual consistency, live accounts, weekly profits, monthly profits. This is 2019 when gold was at like 1200s. You know what I mean? You can see everything from 2019 onward when I was studying the fundamentals in news, doing technical analysis, fundamental analysis, sharing my profits and results, right? And you can come all the way down to recent times where I still do that. Oh, that's not mine. Where I still do that in this modern day, right? Where now I'm using a lot higher lots. I'm still trading the same way. I've become a lot better, a lot more refined, a lot more experienced, develop more capital, and you can see like the difference now. You know what I mean? So I share everything. You can even see my business license with Capital Hungry Private Channel. Online market research service, market research and analysis, education, and so forth. Yeah, you can see my live trades, analysis, wins and losses. It's all shared here over the period of time. Live account, Dominion markets, charts, updates, news headlines, you know what I mean? Important information, general useful information, member results, Capital Hungry private member trading results, and so forth. Right? Just some useful like technical and fundamental information as well. It's just a bunch of stuff here that I've been sharing for years now. You know what I mean? Chart breakdowns, the trades I'm taking and stuff. Yeah. Eric Wong, was that you from the Malaysia page? Was that you, man? I actually gained a couple hundred followers from you, man. If you were that Malaysia page, I just want to say thank you for that shout out. I really appreciate that. I was so surprised and shocked. I just randomly saw this Malaysia page with like 100,000 followers give Capital Hungry a shout out. I was like, damn, Capital Hungry is global around the world here. So that was pretty cool. I really appreciate that. But anyways, everybody, I want to thank you guys for your support. I want to thank you guys for attending this stream. All I executed on was the GBPJPY scalps that we took live at the start of the stream, where the other trade ideas and analysis shared. You can, of course, look to use those trade ideas for the New York session coming up. GJ, I don't know if anybody took this bounce on GJ so far from 0.800. It's already giving a 10, 12 pip bounce we were talking about as well. But anyways, this is going to be saved and uploaded. You can always re-watch it as you wish. Thanks for watching. Make sure you like and subscribe. I'll see all of you guys next time. I'm gonna be uploading another educational psychology webinar this week as well on the YouTube. So stay tuned for that. All right, everybody, take care.